Hey guys, this is Christopher with Azalea City Tax and Accounting. I want to do a quick video to let you know about the Savers Credit or Retirement Contribution Credit. Let's take a look at a quick example. Here we have an example of really basic tax info, simply an income, standard deduction, and the computed tax liability. In this example, we're using someone filing head of household with a single dependent making $28,000 a year. We have no adjustments to this income, as you can see here, which in this scenario means no contributions to any qualified retirement accounts, no contributions to an IRA. Therefore, our adjusted gross income is the same as the taxable income, the total income, $28,000. Just carries down, no adjustments to the income, real simple. After that, we have our standard deduction, which in 2018, guys, is a lot different. The standard deductions have been raised and they have done away with personal exemptions. So for head of household, what you're looking at here is the new 2018 standard deduction of $18,000, which leaves us then with our taxable income, gives us our taxable income of $10,000 and a tax liability of $1,000 based on the 10% tax rate that would be applied here. So without any considerations of any other credits in this example, since there were no contributions to a qualified retirement account, we have $0 for the Savers credit and a total tax due of $1,000, same as the tax liability. Without any credits applied to it, the tax liability is what you're going to owe. Now, usually someone will have federal income tax held out during the year and want it come out of pocket at the time they file their return, but they still pay the tax liability. They still pay whatever it is that's actually due. Federal withholding is simply prepayment of your future tax liability. Okay, so now let's look at an example where the taxpayer contributes to an IRA, what it changes. Here, same example, same income, $28,000, but what we've changed is a $1,700 adjustment. This is a contribution to a qualified retirement account, in this example, an IRA. That amount is going to reduce the total income, giving us our new lesser adjusted gross income of $26,300. Same standard deduction, head of household, $18,000. We reduce the adjusted gross income by this deduction, leaving us with a taxable income of $8,300. So instead of the $10,000 in the first example being our taxable income, we have taxable income of $8,300. This gives us a tax liability of $830, 10%. So you can see right away our tax liability is less. Instead of a $1,000 tax liability that we had in the first example, we now have an $830 tax liability. This is not the Savers credit. This is merely an adjustment to income, a deduction for the contribution to an IRA. So for taxpayers who do not qualify for the credit, which qualification depends on income, filing status, type of contribution, etc., those who don't qualify for the credit still usually qualify for an adjustment to income. That's what you're seeing here. This person has saved $170 simply off the adjustment to income. But we also want to look at the Savers credit here. That's what we're really interested in because it's a lot bigger, it's a lot better. If you qualify for the Savers credit, which in this case this taxpayer qualifies for an $850 Savers credit, that amount is going to dollar for dollar reduce your tax liability. Now, it is a non-refundable credit, so even though the credit is larger here than the tax liability, it can only reduce the tax liability down to zero. That extra amount of the credit cannot be refunded back to you. But it does reduce it down to zero, meaning this person's tax liability, which was $1,000 tax liability when there was no contribution to an IRA, to a qualified retirement account, that $1,000 tax liability changes to an $830 tax liability and then a $0 total tax total. So putting $1,700 into our retirement account saved us here $1,000. Can make a big difference, guys. The government will literally give you money on your taxes for putting your own money away for your future retirement. It's really something to think about. And we'd love to sit with you and crunch the numbers and see what you would qualify for, and we don't charge a thing. It's free to come in and have your tax situation evaluated, and we just hope to impress you enough that you'll come back and file your taxes with us. If you have any questions, if you want to look into this with us, just give us a call, email us, check out our website, azaleacitytax.com. You may qualify for the deduction, you may qualify for the Savers credit, and there's a lot of other really cool stuff we can tell you about. I really appreciate you guys checking out my video. Come check us out on our website. We hope to see you again soon.